Wonderful good day, ladies and gentlemen. Today, Commodity TV is here, guest and host of the roadshow of Stillwater Mining. Maybe a company you have heard of, as this is the largest North American palladium and platinum producer. And I'm very happy and proud that I have here now Mick McMullen here, the CEO of the company. Michael, thank you very much for taking the time.
Thank you for taking the time.
Well, your company, just give us a short overview about the company. 2 sentences.
Well, look, we're the largest PGM miner in North America. We've got the highest grade ore body in the world, and we have a very good smelter and recycling business. And obviously, with the political issues around the world, most of the PGM suppliers in either South Africa or Russia, being in the US, is a huge advantage for us.
Oh, yes, I believe that political-wise. We saw a lot of disruptions in the supply and demand side of platinum and palladium. What is your current view on that, and how are you affected with the company?
Well, obviously the strikes in South Africa have gone on much longer than anybody expected, and we think that this year there's a shortfall of palladium of around about 1.5 to maybe 1.6 million ounces. Platinum maybe 1 million ounces, and what we've seen for us is that we've seen our customers very, very keen to lock in supply. We entered into an agreement with Johnson Matthey the week before last, where we'll sell them some of our mined ounces and reference to spot and some premium. And so we see our customers very keen to lock up, secure supply.
Yeah, I believe that. They are mostly automotive companies, or is it jewelry, or is it you sell to Johnson Matthey and then they sell it?
Historically, we've sold to car companies and auto catalysts and some jewelry people. We've now changed, and we've been selling to the whole market. So banks, traders, auto cat manufacturers, car companies. With the Johnson Matthey deal, we'll sell to them for all of our mine production. A little bit of our production will go to jewellery for Tiffany's, and they will then manufacture the auto catalyst and sell it. But we also have about half our production is from recycled sources, and that just will go into the market, whoever wants to give us the best price on the day.
Okay, let's come to your 2 mines. How was the business last year for you? You had some issues already, but you are bringing down the all-in sustaining costs, or let's say the all-in production costs. Elaborate a little bit on that. How was last year, and what have you improved so far this year?
Last year was a big year of change for the company. We had a change of board and CEO. I became the CEO at the end of last year, and we're really looking at focusing back on the core assets, which are these high-grade mines in Montana and the smelter and recycling business. We took some impairments on some external assets the company had bought historically. These were all non-cash, but fairly large impairments. And our focus very much is on those core assets in the US now. And we've managed to drive our costs down a bit. We have a goal of reducing our costs back to where they were in 2011 levels.
What was it per ounce?
It was around in the low 700s, all-in sustaining cost per ounce. And last year we averaged about 820, 822. Last quarter we managed to get our costs down to 788, and so we're some way on maybe a third of the way there. We've still got some work to do, but again, our focus is very much on costs as opposed to growing the business. Many mining companies have been very growth oriented as prices have gone up, but haven't actually made any more money. We'd like to focus on making a lot more money and then worry about the growth secondary.
Okay. When you, as said, you are operating those 2 mines. What is the game plan for this year and for next year? How many ounces you want to produce? What do you want to do?
Our guidance for this year is around about 530,000 ounces out of the mines, at between 800 and 850 all-in sustaining costs, probably towards the lower end of that, I would say. Next year we probably will see a bit of a jump up in production. We have a new project coming on stream called Graham Creek, which is at our East Boulder mine. That'll probably see our production jump up about 20,000 ounces a year. And again, a little bit lower cost as well from that material.
So that would be like 4% up jump?
Something like that, yeah. Great. So, and again, we have a large project coming on stream at the other mine in about late 2017, early 2018. That's called Blitz, and that has the potential to really drive a fairly significant jump in production. We're not giving guidance out on that at this point in time, but it looks to be fairly substantial.
What are your average grades in the mine? As I presume you have the highest in the world, nearly. And what is the life of mine?
Well, the grades are the highest, and it varies between one mine is 0.4 of an ounce to the tonne, and the other mine is 0.55 ounce, not grams. This is ounces. So 15 grams, 16 grams to the tonne, very high grade. Life of mine, as we stand today, is 35 to 40 years, but that actually doesn't cover all of the mineralisation we know we have. So mine life, for all intents and purposes, is unlimited. The ore body is 28 miles long, so 40 kilometres long, at least 3,000 to 4,000 feet vertical. So it's an enormous ore body with very high grades. It's all about efficiency now to get the stuff out as cheap as we possibly can.
Let's move for a second to the strikes in South Africa, and I think it's mainly South Africa, but also a little bit Zimbabwe is affected. Do you see this coming to an end, or is there any tension that this would ease?
It's hard to say. It's one of those things that it could end quickly, but based on the discussions we had last week in London, it appears that the producers have reached a point where they feel that they can no longer negotiate in terms of improving the offer. They believe that if they go, with a higher offer, that they basically don't have a business. And on the other hand, the union appears to be very entrenched. Doesn't seem to be a lot of willingness or goodwill by either side to try and resolve this quickly. And as I say, I think the miners are in a position where they clearly feel that if they were to give in to the demands of the union, that it's probably going to drive them out of business for a large extent. So I think the answer is we're not seeing any rush for this thing to end.
Last question. Talk about financials. On the one hand, what is cash in the bank? You had a big, two big impairment charges last year already. So this is cleared off the balance sheet now. What do you have cash in the bank, and who are your largest shareholders? And of course, I think very important for Swiss and German investors, do you maybe think for the future to pay a dividend?
Well, cash in the bank is very good. It's at the end of last quarter, it was $474 million. In addition, we had about $80 million of undrawn credit facilities, so liquidity position is fantastic. We have no short-term debt. We have some debt that is very long-term in a convertible note. So liquidity is really very strong for the business. Will we do something with that cash? My goal has been to try and do something for shareholders. I'm not committing to whether it's a dividend or a buyback or whatever, but
you want to do something for your shareholders.
I think we'd like to try and get to a point where we do something for our shareholders, and but I need to understand, what I can drive my costs down to on the operations before we start handing the money back. But certainly we're not holding it for any other project use or anything. It's very much about just being fiscally responsible at this point. Once we're comfortable where the operation's going, then we can look at those options.
Great. Well, then thank you very much, Mick. All the best for that, and we will watch you carefully now.
Thank you very much.
Thank you. Yeah, ladies and gentlemen, it was Mick McMullen, the CEO of Stillwater Mining, and yeah, you heard it, $474 million in the bank. That's almost 25% of the market cap is in cash. They have had their issues last year. They have done their homework now. They bring down the all-in sustaining costs. So I think the company is on a perfect track to move higher. As we saw already, the share price started to rise, and it will be a great profiteer, of course, of rising platinum and palladium prices in the future. So check out the company. Thanks, and bye-bye from Zurich.